Good day. We are Auditaholics here to present to you Past 2 Inventories. Welcome BSA 1A. Today's agenda is Past 2. Past 2 is used for the treatment concerning inventories. What does Past 2 recognize? Primary issues in inventories at yung determination of cost to be recognized as asset and recognized as expense. Also, it serves as a guidance in identifying the cost of inventories or the measurement na i-explain ni Cleo in a more detailed manner later. Does Past 2 applies for all inventories? No, for there are exemptions. One, because another standard applies for that asset. Another, assets not measured under LCNRV. First, yung other standard applies for that. Example nun is financial instrument because PAS 32 and PFRS 9 ang treatment for that. Then, biological asset and agricultural produce at the point of harvest because PAS 41 is the treatment for that. After harvest, PAS 2 is applied. Second, asset not measured under LCNRV because the standard requires inventories to be measured at the lower of cost and net realizable value and outlines acceptable methods of determining cost. What is inventory? Inventories are assets that are for sale or used in the ordinary course of business, including the raw materials used. Examples are illustrated in front of you. The first picture is, you can see raw materials. Second is land held for sale, used in the ordinary course of the business. And the third picture shows the merchandise inventory.
Measurement. Inventories are measured at the lower cost and net realizable value. Yung lower cost and net realizable value will be discussed by Kyla later on. The cost of inventories comprises the following. The first one is the purchase cost. Halimbawa nito, yung mga bagay na binibili mo, yung presyo nun o yung tax nun, yung transport cost also, tsaka yung handling. Example para dun sa purchase cost ay yung mga raw materials na binili mo or ng isang entity para sa product na ipoproduce. Halimbawa nito ay yung earphone. Di ba sa pag-produce ng earphone, kailangan natin ng materials like plastic, rubber, etc. Yun yung nagsisilbing raw materials in order to produce an earphone. The second one is the conversion cost. This is applicable for manufacturing business. It includes the direct labor and also the overhead. Dun tayo sa direct labor. Yung direct labor, ito yung mga manggagawa o trabahador na binabayaran mo para i-convert yung raw materials into finished goods. Yung overhead naman, ito yung factory rentals, factory utilities, and factory repairs and maintenance. Or yung example nito ay yung broken machineries, di ba? Tapos, hindi man siya related dun sa mismong product, pero dahil nga na-incur mo yun, ibig sabihin, kailangan mo pa rin siyang i-record bilang cost nun. Yung kasunod naman yung other costs. Necessary in bringing inventories to their present location and condition. Yung kasunod naman ay yung mga bagay na dapat excluded sa cost of inventories at tinuturing as an expense. Ang una ay yung abnormal amounts. Ito yung mga wasted materials, for example, broken machinery or from inefficient to operation. O kaya naman yung mga amount na kung saan, halimbawa, masyado siyang malaki para dun sa ini-expect mo lang na amount. Kasi 'di ba dapat yung amount tama lang yung pagkaka-record natin. Yung pangalawa naman ay yung storage cost. Tinuturing siya na expense unless na lang kung essential siya sa production process. Nun mo pa lang siya pwedeng isama sa cost of inventories. Administrative overheads unrelated to production. Tinatawag din siyang outright expense or period expense na kung saan, kung na-incur mo within this year, dapat i-record mo agad siya in the year it was incurred. And the last one is the selling cost. Also, an outright expense at tinatawag ding operating expense but related to selling.
Cost formula. Philippine Accounting Standard 2 provides the three cost formulas. We have the specific identification, first in, first out or the FIFO, and the weighted average. Before explaining these three, let us identify first the definition of the cost formula. Cost formulas deals with the computation of cost of inventories, or this refers to the flow of the cost. In accounting, ang inventory ay kino-consider na asset dahil nire-represent nito yung mga goods na naiproduce ng isang business para ibenta. Now, when the inventory was sold and gain income, the value of inventory will be charged as an expense. O ito yung tinatawag natin na cost of sales or cost of goods sold. The value of inventory sold during the accounting period. We use these cost formulas para malaman or makompute natin yung halaga ng inventory na nagamit at hindi pa nagagamit in a period of time. Specific identification, used for inventories that are not ordinarily interchangeable and those that are segregated for specific projects. Specific costs are attributed to identified items of inventory. Specific identification ay isang method where you are tracking each item in its inventory individually. Kadalasan ginagamit ito ng mga kumpanya na may kakaibang produkto at may iba't ibang presyo. Halimbawa, ikaw ay nagmamay-ari ng art dealership. The paintings you are selling might be distinctly different. Now, the value of your inventory would depends on which particular painting you sold. You keep track on paintings as individual inventory for it has different prices from others. First in, first out. It is assumed that inventories purchased first are sold first. Ang FIFO ay ina-assume mo na yung naunang inventory na dumating sa business mo ay yung dapat yung unang ibebenta mo o dapat maunang mabenta. First one's in, first one's out. This occurs because as the prices rise over time due to inflation yung pagtaas ng presyo ng bilihin, the FIFO assumption implies the older lower cost items will make up the cost of goods sold before the newer higher cost items. For example, ang isang hardware ay mayroong 20 screwdrivers. Yung 20 screwdrivers na yon ay nabili niya sa iba't ibang store and iba't ibang price. Yung 10 ay nabili niya sa buwan ng January that costs 39 pesos each. Yung 5 ay nabili niya sa buwan ng March and cost 41 pesos each. And the remaining 5, nabili niya ng buwan ng June na may halagang 38 pesos. Now, FIFO will assumes that screwdrivers get sold in the order they came in. First one's in, first one's out. Weighted average. Cost of sales and ending inventory are determined based on the weighted average cost of beginning inventory and all inventories purchased during the period, and this may be calculated on a periodic basis. Weighted average, inaalam ng isang kumpanya ang halaga ng bawat unit na naibenta as the average cost of all the inventory on hand. Dinadetermine nito yung average cost of sales and ending inventory in a period of time. At nag-require ito ng recalculation of inventory ng cost at each sale and purchase.
Net realizable value. It is the estimated selling price in the ordinary course of business less the estimated cost of completion and the estimated costs necessary to make the sale. Sa makatuwid, ito ang kabuuang halaga na inaasahan ng kumpanya na matanggap pagkatapos ang asset ay mabenta minus costs that come from its disposal or sale or ibabawas ang halaga na nagastos mula sa pagbenta ng mga asset. Net realizable value is different from fair value. NRV comes from value of the asset excluding a reasonable estimate of cost, while fair value is the estimated selling price of inventory at present situation. Measuring inventories at the lower of cost and the NRV is in line with the basic accounting concept that an asset shall not be carried at an amount that exceeds its recoverable amount. Inventories are usually written down to NRV on an item-by-item basis. Raw materials inventory is not written down below cost if the finished goods in which they will be incorporated are expected to be sold at or above cost. Steps on calculating the net realizable value. First, it is to determine the market value of the asset. Second, it is to determine the cost. And to calculate the net realizable value, the market value of the asset shall exclude the selling cost of the asset.
Recognition as an expense. The carrying amount of an inventory that is sold is charged as expense in the period in which the related revenue is recognized. Expenses are recognized in the same period as the revenue. Example, AC shop purchased 200 pair of shoes, paid in cash 400,000. The AC shop sold the shoes for 3,000. After 3 days, the shoes was sold out, and the income of AC shop is 600,000. The cost, 400,000, will be recognized as expense. Inventories that are used in the construction of another asset is not an expense, but rather capitalized as cost of the constructed asset. Example, the AC shop owner decided to have a much bigger store because the owner also want to have a clothing line. So he decided to have a factory. The construction for the building capitalized as a cost of a constructed asset. So yung mga materials o yung mga raw materials na gagamitin doon is recognized siya as a cost of a constructed asset. Disclosures. Disclosures is the additional information to the financial statement that may help the users to make a better decisions. The amount of inventories recognized as expense during the period. The total cost of any write-down inventory will be capitalized as expense. The carrying amount of inventories hoping to be the income of entity become a liabilities because any event or circumstances that led to reversal write-down inventories.